A lot of people are asking the same question. What will happen to crypto? Will it recover? Will it crash again? We will answer in this video all of these questions, so stay tuned. Cryptocurrency is a new asset class that has been around for only a handful of years. It has been an exciting time for investors and those who are interested in these types of assets, but it has also been a volatile time. The crypto market is still in its infancy, and it will take time before we know what the true value of cryptocurrencies really are. The crypto bear market this month was a big blow to the industry. Many of the top coins lost up to 90% of their value, and this has shaken investor confidence. But there are some things you need to know about crypto after the bear market. Number 1. Crypto market fluctuations are normal and healthy for the industry. Crypto prices fluctuate, but it is normal and healthy for the market to go in cycles. This is because crypto is a relatively new technology, and there are always changes that happen in the market. While crypto has had its ups and downs, the market is still alive and growing. There are plenty of opportunities for investors in this market. If you believe in the future of crypto and want to invest, there are some investments that are better than others. But in the bear market, you better stick with top coins and networks like Ethereum, Bitcoin, and Binance Coin. Number 2. Crypto volatility creates opportunity. The crypto market is still volatile, but it has a strong history of recovering. For those who are looking for an investment opportunity in the crypto space, now is the time to buy. Even though the market has been volatile, it's still likely that we will see higher prices of Bitcoin, Ethereum, and other major coins in the future. Number 3. What are the real causes of the crypto market recent crash? The crash of Bitcoin and the crypto market is not just due to a single factor but a combination of factors. The crash was caused by a series of events that caused a negative feedback loop. The first event was the interest rates hikes in 2022. When the Federal Reserve raised interest rates, it made borrowing costlier, and this caused people to spend less on items and services, which led to a decrease in demand for all money markets. The second event was global inflation that happened as a result of the Fed's interest rate hike. All this combined with the catastrophic events that recently happened in the crypto markets, like the Terra Luna collapse, Celsius Network halting withdrawals, and Coinbase downsizing their employees by 1,000 people, affected the market negatively and lead to more investors panic selling. Number 4. Why you should keep investing in cryptocurrency despite the crash. Investing in cryptocurrencies is not for the faint-hearted. It requires patience, research, and risk management skills. Bitcoin is the first ever cryptocurrency to have been introduced to the market in 2009. It has evolved over time with new cryptocurrencies and tokens emerging in the market. The current trend indicates that there is a significant shift occurring in the financial industry, with cryptocurrencies emerging as alternative investments and ways of payment. Long-term investment is one of the best strategies to grow wealth, and especially when it comes to Bitcoin. Long-term holders of Bitcoin has proved to be the true winners in the crypto market. Combining a long-term strategy with dollar cost averaging could be your best investment option in the crypto market. Dollar cost averaging is a strategy which involves investing fixed sums of money at regular intervals in a particular investment vehicle. It provides an investor with dollar-weighted return irrespective of what the price does at that moment. Investing in cryptocurrency despite the crash in 2022 is one way to plan for long-term financial security and stability. To learn more about investing and how to achieve financial security and stability, subscribe to our channel to get more content like this. Live rich. Think different. Think like rich.